Hey friends, this is Ayan here and once again a warm welcome back to you on YouTube channel The Delta Neutral. So in this video we are going to understand what are in the money, out of the money and at the money options. So before starting this video I'd like to request you not to skip any part of this video and please do watch this video till the end because half learning is never a learning. Another thing is if you do watch this video till the end you'll be able to get a pro tip which is perhaps going to act as one of the most precious pro tips that you have ever had from an YouTuber. So let's start, but before starting, people who are new to my channel, please don't forget to like this video, to subscribe to my channel and to hit the bell icon as well. And if you want to see what are my views on the live feed, what are my views on the live market, if you want to trade with me as well, please don't forget to join my Telegram channel. The link is given in the description below. So let's fly to the screen and let's understand what are in the money, what are at the money, when to sell, when to buy, what to sell and what to buy. Let's start. What's up friends, we're on the screen right now and let's start with what are at the money, in the money and out of the money options, or in short the ATM, ITM and OTM options. Well, most of you might be having some difficulties in understanding this thing from the conventional definitions. So what I tried here is to make the same thing in an easier way. Okay, let's say this white line, this is the current market price and let's assume that the market is right now trading at 18,000 levels. So any put option or any call option whose strike price is more or less equal to the current market price. It may not be exactly equal, but it's more or less equal. These kinds of options are going to be termed as the at the money options, the at the money put option or the at the money call option. Now let's understand the first scenario of the rest four scenarios. Okay, and in the money put option. Let's say that right now the market is at 18,000 and right now this is the 18,100 put option here. Okay, so what is an in the money put option? Any put option whose strike price is above than that of the current market price is going to be termed as an in the money put option. Okay, so someone is having the 18,100 put option here. Okay, so what does that mean? He or she has the right to sell the market at 18,100 here, whereas the market itself is trading at 18,000. So he or she has the opportunity, has the moneyness of making 100 points profit here. Okay, so what is the intrinsic value of this put option then? Then the intrinsic value is 100 points, right? A reverse scenario, someone is holding an 18,100 call option instead of an 18,100 put option, which means he or she has the right to buy the market at 18,100 levels, whereas the market itself is trading at 18,000 levels, which means if he or she buys here, he or she will be making a net loss of 100 points. So does this options has any kind of moneyness, any kind of profit opportunity? Absolutely no. Okay, does this option have any kind of use itself? Okay, it doesn't have any kind of use indeed. Okay, so any option which is having an intrinsic value, it is going to be termed as an in the money option, or any option which is not having any kind of intrinsic value, which is not having any kind of use indeed, it is going to be termed as an out of the money options. So for put options, it will be termed in the money if the strike price is above the current market price, and for call options, it will be termed out of the money if the strike price is above than that of the current market price. Just the reverse scenario. Let's say right now the market is at 18,000 again and someone is holding a put option of 17,900 strike price, which means he or she has the right to sell the market at 17,900, whereas the market itself is at 18,000 levels, which means if he or she uses this option, he or she will be making a net loss of 100 points. So is there any kind of use, any kind of actual use of this option? Indeed, never. So any option which is having no intrinsic value, no use, what do we term them? We term them as out of the money options. So any put option whose strike price is below than that of the current market price, it is going to be termed as an out of the money put option. Hope you understand. And last but not the least is, let's say someone is holding a 17,900 call option over here. Okay, the strike price of that call option is below than that of the current market price. So that means someone has the right to buy the market at 17,900 right over here, whereas the market itself is trading at 18,000. So if someone uses this option, he or she is having a profitable opportunity of 100 points. The moneyness in this option, the intrinsic value of this option is 100 points. And what is an option which do have an intrinsic value? It's the in the money option. Okay, and this is an in the money call option. So for call options, If the strike price is below than that of the current market price, we're going to term it as an in the money call option. So now you are clear with the definition, and that's what I hope. If you are still not clear regarding the definition, if you want a more transparent, a more crystal clear study on what these things are, if you are still having doubts, please let me know. I'll try to help you to my best extent. Please do let me know your queries on the comment section given below. So let's move to the next slide and let's understand what is an option price made of. See, just now I was talking about intrinsic value. Okay, but when we will make a practical study, from the option chain, we will come to see that the options price is not only the intrinsic value, but before the expiry day. Okay, at any point of time before the expiry day, an option also have a betting value, also have a bet value or a time value. Okay, this is the emotional value of the option, what option traders are thinking, that how much in the money it will travel. Okay, how much in the money this option will be. Okay, the sentiment of option buyers, that gets reflected in the time value. I know most of the people who is watching this video right here are aware of what theta decay is, what time decay in options is. People who are not aware of, just let me tell you one simple thing, that an option is not like an equity, it's not like a share in the stock market. Okay, it has a specific date after which that option will be of no use. Although if it is in the money, then also it's going to have no use, since the option is an expiring contract. It has a particular date or a time by which it will get expired. Okay, so what are the two values that we can see in an option? Obviously the intrinsic value that I was talking about, the net and clean profit opportunity that the option buyer has, and the time value. Okay, now just refer to the understanding in the previous slide. You can just rewind back the video to the past 30 or 40 seconds, and you'll come to see that for put options, what is the intrinsic value? It's obviously the strike price minus spot price. And for call options, what is the intrinsic value? It's obviously the spot price minus strike price. If you have any point in understanding this thing, just rewind back the video to this previous slide, to the past 30 to 40 seconds, and just try to figure out what am I trying to define over here. Okay, so now let's have a scenario based study. And what are the 6 scenarios that can come? These are the 6 scenarios. Okay, so what are the 6 types of option that an option buyer can hold at any point of time? And let me make one thing clear, that I am making the scenario based study as on the expiry day. Okay, so 6 scenarios are coming. Okay, what are the 6 scenarios? Someone is holding an at the money C, an at the money P, or an ITM C, or an ITM P, or an OTM C, or an OTM P. So whatever be the category, okay, the time value of any option on the expiry date is going to be 0. Ideally it's going to be 0. I know it will have some value, 4 rupees, 5 rupees, 6 rupees, 10 rupees, or whatever, but ideally it's going to be 0. Okay, so this for this column, okay, I have filled 0 for all, because ideally the time value for any option on the expiry day, it's 0. So let's say let's talk about the at the money call and the at the money put options. Okay, let's say someone is holding the 18,000 call option or the 18,000 put option, which means the right to buy the market at 18,000 or to sell the market at 18,000, whereas the market itself is also at 18,000 levels. So is there any need of buying the market at 18,000 or of selling the market at 18,000, whereas the market itself is at 18,000? Never. No. So is there indeed any use of such an option? No. So what is the intrinsic value of that option? Obviously it's 0. Okay, for OTM options, any kind of use? Hope you understand, it has no use anymore. Okay, so it can be an out of the money call option or put option, whatever, it has no use because it has no intrinsic value. If you are having a right to sell the market at 17,900 but the market is at 18,000, you will not use that option. Or if you are holding the right to buy the market at 18,100 and the market itself is at 18,000, you will not buy the market to make a 100-point loss. So there's absolutely no use. So for OTMCE and PE, the intrinsic value is also 0. So what are the options that are going to have some numerical value, some non-zero value? Those are the in the money call options and the in the money put options. Okay, people holding that call options can use their right to buy the market at a lesser price. Okay, and that is the intrinsic value. The difference is the intrinsic value, that spot price minus strike price. Okay, that is the profit potentiality he or she is going to have from a lot. Okay, and just the reverse scenario in case of in the money put options. So hope you are clear with the scenario study as well. Okay, so let's not waste any more time in this theoretical study. Rather, let's fly straight to the option chain, to the Y data, and let's practically study things. Let's practically understand how to understand what is the sentiment in the market, what is the sentiment of the option sellers and the option buyers in the market, what is time value, what is intrinsic value, and last but not the least is what we will end is a pro tip that will most accurately 80 to 90% of the times tell you that on intraday perspective which are the most important support and resistance lines that are going to act in the market. And well, so let's start the practical study with the OI data, then we'll move to the option data, and then we will study using strategy builder and so on. So here the platform I am using is obviously Sensible. I do prefer using Sensible because it gives you the data in a more comprehensive, in a more practical and a more efficient way. You can use any other platform if you like to do so. So that's not my concern, but I'll recommend is to use Sensible here because it is good for beginners, it's good for real traders, as it makes us more clearly understand what actually the scenario in the market right now is. Okay, it gives the data in a more picturesque way. So here in the OI data section you'll be able to see two such bar charts in Sensible. One is for the net OI till date, another one is for the OI change, which is the change in open interest for the last trading session. So this is as of the 27 January expiry, and this changes has taken place on 21st January trading session. Okay, so this is perhaps the OI data for the last monthly for the first monthly expiry of 2022. So here we can see that it denotes the call option OI using the red bars, whereas the put option OI using the green bars. And as we can see right now, the call side is more dominating. You can see that right now the market is at 17,600. Okay, 17,617 is the spot price, and thus 17,600 call and put, they are the at the money options right now. And if you just have a look at the at the money right now, see there is a greater build up of, there is a greater shorting of call options, there is a greater writing of call options by the option sellers in the 17,600 levels than that of the put options. Okay, so people just have sold 1.4 million put options at 17,600, whereas they have sold 2.1 million 17,600 call options. So what does this indicate? It indicates that the market sentiment is quite bearish right at this point of time. Another thing we can just see over here is, see the 17,700, 17,800, these are all what? These are the at the money call options, right? And see the crowd of option sellers over here. The option sellers are making a crowd by selling these options over here. Okay, so people are more preferable to sell out of the money options. Why? Because right now till expiry date, right now at this point of time, these options are having no intrinsic value. The only value that they are having is the time value, and the option sellers know very well that the time value will get diminished by the expiry. Even if the market recovers from the 17,600 level, it will face some resistance here, again it will face some resistance here, and by the time it will be facing the resistance, there will be a time decay, there will be a decay in the value of the options. Okay, right now they are only having time value, so that value will get decayed, and if by any chance it tries to recover but get resistance at these levels, okay, they will ultimately turn into at the money, not into in the money. And even if an option is at the money on expiry day, the ideal value of that option is 0, and the option seller is going to make a huge profit from it, right? Now the most interesting thing to see here regarding what the pro tip is, see 17,500, this call option is an in the money call option, but still 440k contracts, 440k such in the money call options have been sold, which means option sellers are so aggressive over here. Okay, right now the 17,500 option, it's trading, I mean I don't know its price, whatever its price may be, see the 17,550 or the 17,500 or even the 17,400, 62,000 17,400 call options have been sold. So what these people, right now this 17,400 call option is having an intrinsic value of 200 rupees. Right now the 17,500 call option is having an intrinsic value of 100 rupees. Despite having an intrinsic value, despite having a probability to win, people are selling these call options as well. So what is their view? So this is perhaps regarding what the pro tip is. Okay, this is the most important thing you need to look from the OI change data. Okay, that where are the in the money option sellers? So this is an in the money options, and some people have sold that. How many? 440k such options have been sold over here. This is an in the money options, and 62,000 such options have been sold over here. So we need to only look at this, that where are the in the money sellers. See, at 17,650 levels there are some in the money put sellers. 120k put options have been sold here, okay, despite being an in the money put option. So this is perhaps the most important thing you need to look at when studying the conventional Y change, because I know most of the people will tell you that, see, identify the longest bar from here and that is going to act as the strongest resistance, identify the strongest bar in the put side as well, that is going to act as the strongest support. But it's not like that. And even if it acts like that, then it will, I mean, by the time the market will reach that level, you'll be not be able to take any kind of trade. Rather, try to figure out where the in the money option sellers are. See, the highest number of in the money option sellers are at 17,500, right? The highest number of in the money put option sellers are at 17,650. So let's understand that. Let's take ourselves to that place. Let's imagine that we are selling the 17,500 call option right now, and what is our view? Let's move to the strategy builder. Okay, so this is the pro tip that I was talking about. So right now the market is at 17,600, okay, and some people who are so bearish that he or she is selling, or they are selling the 17,500 call option. Okay, see, I know there is a risk of selling the 17,500 call option as it is an in the money call option, but even if at such point of time, what is the intrinsic value of the 17,500 call option? It's spot price minus the strike price, which means the intrinsic value is right now 17,617 minus 17,500, which is 117 rupees. But what is the price of that option? The price is 233 rupees, which means there is almost a time value of 100 to 106 rupees in the option. The time value of that option is 116 rupees. So the option seller has sold the option with the view that you will be only profitable from buying these options if the market expires above 17,733. See, in sensible we get the break even point. So this is the break even point, 133 points above the present market price. Okay, so the people who are selling the call options going in the money, okay, so what is their view? That even if the market goes above, it will not cross the range of 100 points from now. Okay, the market cannot move above 100 points from now. That 17,730 is the level by which the market is going to get a resistance. Okay, so if someone is so aggressive that he or she is selling this number of in the money call options, okay, there might be some powerful traders over there, there might be some manipulations over there. Okay, so what those people try will, they will try to defend this 17,730 levels on the upside. So let's delete everything over here. Let's move to the chart. Okay, so let's delete everything over here. Okay, so I have deleted everything. So what is an important resistance that comes out from this study? It's 17,730. 17,730. This is the levels which the in the money call option sellers will try to defend. Just similarly, we have seen that at 17,650, 17,700, there are some put option sellers. Okay, so these people are so bearish that they are selling in the money put options. They are so bullish. Okay, these people are bullish that the market will now recover, the market will now come upwards, it will now move upwards. Okay, so they have sold an in the money put option. Just imagine the put option which is already having an intrinsic value, they are selling that put option. Right now the market is at 17,600. So what should be the intrinsic value of the 17,700 put option? It should be 100 rupees, whereas the price of that put option is 163 rupees, which means even if the market will be at the same level, what is the time value right now? It's 63 rupees. And even if the market doesn't move, it remains at the same level right now. What is the profit per lot that the option seller is going to have by the expiry day? It's the time value, that is 63 rupees. And if someone is selling the 17,700 put here, what is the break-even point that comes? It's the present price minus, that is 17,600 minus 63, okay, minus that time value, which is the break-even is 17,537. So what is the level this put options sellers will try to defend? It's this break even point, which is 17,537. So this is perhaps the level that the put option sellers will try to defend. Okay, so in both the places there are option sellers who are aggressively going in the money, who have so much of confidence from the market regarding the levels. Okay, so we are little traders, we should not be on either side, we should not be biased, rather we should be more focused within the range. If the market is within the range, then what should we do? We should make a straddle, we should create a straddle or a triangle or some range bound strategies. But at any point of time, if the market closes, makes a closing candle of 5 minutes or say 15 minutes, any such level, okay, above this level or below this level, if it's below this level, if the market closes below this level, that we are going to sell the market with a stop loss of minimum 50 points and a target of 100 points. If the market is going to give a close above this level, then we are again making a stop loss of 50 points and we're going to buy the market with a target of 100 to 70 points. Okay, so these are the ranges which are perhaps going to act as the more accurate support and resistance levels for the upcoming trading session. So this is the pro tip, this is the way we should analyze the market from the OI data. Okay, the same thing, if you don't need such a pictures explanation, you can just go to the option chain. So experienced trader, they don't need such bar charts and all this for the statistical trading, rather they only prefer the option chain to study these things. In Sensible, you'll also be able to get the other Greek values for an option. See, right now it's this line is marked with a gray color, which infers that this is the at the money strike price. So the same thing that you will be seeing in the OI data, the option chain will just tell you the last trading price of those options, the OI change, the Greeks and all that. So this is just the difference, it's nothing different. So the more you will practice these things, the more you will start analyzing these things on a daily basis, the more you will get acquainted to these things. And hope the pro tip that I have shown to you, you'll remind this, you will apply this in the real markets, you'll try to implement this. And please don't start with your first experiment with your real money, because if you just start with your first experiment with your real money, see, I said that this strategy, this thing to analyze, I mean this way to analyze the perfect support and resistance for the market in intraday perspective, it works 80% times, okay, which means it works 80 out of 100 times. Now the rest 20 times, it can be your first trading session, it can be your first experiment, or it can be your 79th experiment or whatever. Okay, so never do the first experiment with your real money, rather try this thing, try this pro tip with pen and papers or using virtual coins or whatever. Test this thing and then try to implement slowly and steadily in the real markets. This is really going to help you in your upcoming trading career. Well, so that's all for today, my friends. Hope you like this video, hope this video would have helped you to some extent. So please do encourage my endeavor by liking this video, by sharing this video, by subscribing to my channel, and by hitting the bell icon. So that's all for today. Thanks for watching.